What's going on, guys? Welcome back. Taking a look this morning. It's the 4th of May. Taking a look at BBBY, Bed Bath & Beyond, has currently been delisted from the market, from the exchanges. What is going on here? Let's talk about a couple scenarios here that, in my opinion, investors had plenty of time to get out of this stock and at least withdraw whatever funds were left in those losing positions, unless, of course, you're short. So Bed Bath & Beyond had plenty of warning signs that it was not doing good. And the longer those declines in price took place, and we didn't get those pumps that, excuse me, that took place like back in here early in 23, once again over here, things began to get more and more concerning. So we were long Bed Bath & Beyond. I think it was just around $1,000 position. We had two positions. One was from the $1.60, $1.65 range, which we took a small loss on. We were stopped out because the price did not rise. We were long that, and then we got in again right around that $1.50, $1.55 range. And that was quickly stopped out as well for a small loss. And then the stock actually really continued. So the $1.50, $1.60 range right up in here, you can see we got a small bounce. Then the price actually never quite recovered, and ultimately where it's at today, or where it was 2 days ago, 7 cents. So guys, you had plenty of time to get out of this position. I know investors, some investors anyways, were long from much higher prices, $5 and stuff along that, which is much higher, unfortunately, if you're holding long. So in order to be able to trade another day, invest in another stock, not financial advice, but you should consider some kind of a stop loss risk, program, something along those lines that will preserve your capital so you can, go buy another stock that you are bullish on for whatever the case may be. If you are looking to get long or even short, if you hold that stock that you're long from $5 to, ultimately getting delisted at 7 cents, unfortunately you've lost basically all your money, well before it gets to 7 cents. And we'll actually do a quick read here on an example when a stock gets delisted. So just like I was long from the $1.60, $1.50 range, and the position was stopped out because the reason why I was stopped out is because the chart didn't do what I expected, and I was not willing to, essentially risk that whole $1,000, we'll say, if the stock just, went to zero. I was only willing to risk, X percent on each of those trades, and I never really saw the setup come back that I wanted to get back in and, buy again. And obviously it worked out because the stock went from, where I bought it, $1.50, $1.60, and then, was essentially delisted and 7 cents. So, that worked out. That's just a small example with, not a ton of money, of course, but, also not $100. And, we moved on, and now we can buy and trade other stocks and cryptocurrencies, whatever the case may be. But looking back, if you were long this thing from $5, whatever share amount you had, and you cut your losses at $2 or $3 or even $1, at least you have some money to walk away with, and you can rebuild that account or, that amount of funds back up. But when it goes down to, ultimately 7 cents and gets delisted, you're pretty much out of luck. You had your opportunity. I've been there. I've held positions way longer than I should have, but we just try and learn from that and move on. But you got to be able to cap your risk and stay in business and continue to buy and sell stocks. All in to nothing. Might work once, might work twice, but it looks like in this scenario might not work out too well for those ones holding, hoping that this thing, skyrockets back up, does those multiple 100% moves out of nowhere on earnings. And we obviously were waiting for that big earnings move, which never took place, like it took place in previous earnings announcements, and not good. Trouble, big time. And we just never saw this thing recover. So hopefully, you didn't lose too much and you can learn from this. But people get so caught up in, that's their stock or their cryptocurrency. Let me drink some coffee here. And, it doesn't matter. It's just another product to, essentially try to, make some money and put some money in, pull a larger amount out, go short, pull a larger amount of money out. There's tons and tons of stocks, tons and tons of cryptocurrencies, tons of futures currencies. Why get so attached on one? If it doesn't perform or doesn't do what you expect it to do in X amount of time, just move on. And if it starts to show that strength again or that weakness, whatever you're looking for, just get back in. But, essentially just waiting for something that is not happening. You're just tying up capital. You're, missing out on other opportunities. So you should really look into, if you have not, please make your own decisions, of course, a risk parameter for your trades or your investments, and figure it out. What risk are you willing to take? And if that stop gets triggered, you move on. Either get back in the trade if it shows strength or weakness, if you're long or short, and if it doesn't, that's fine. Like I said, there's hundreds of other stocks, and there's tons and tons of cryptocurrencies and futures that you could be trading with that money instead of having that money tied up in something that's just not doing what you originally thought it would do and why you got into that trade. I have a trade, a market risk sheet actually down in the video description. Just lies out a risk example when investing. Check that out. It's free download. I also have a trade tracker, free download as well. Both are in the video description. Guys, I have a little, let's see if we can get this on the screen here. So it's a little rundown on a stock delisting here. So we have, when a stock is delisted, it means that the stock is removed from the exchanges where it previously traded and can no longer be bought or sold through that exchange. This can happen for a variety of reasons, such as if the company no longer meets the exchange's listing requirements, if the company goes bankrupt, or if the company is acquired or merged with another company. When a stock is delisted, investors who own shares of that stock may experience a loss of liquidity, as it can become more difficult to sell their shares. In some cases, investors may be able to sell their shares over the counter, which means that they can trade the shares directly with other investors rather than through an exchange. If the delisting is due to bankruptcy or insolvency of the company, investors may be entitled to a portion of the proceeds from the liquidation of the company's assets. However, this is not always the case, and investors may end up losing some or all of their investment in the company. If the company is still operating but has been delisted from the exchange, the company's shares may continue to trade on other exchanges or on the over-the-counter market. In this case, investors may still be able to sell their shares, although the liquidity of the shares may be reduced. It is important for investors to carefully monitor their investments and stay up to date on any changes. Let's see here. Any changes that may impact the value of their holdings, including delistings. So this is just one example, guys. BBBY will ultimately end up seeing what happens here with this, but so far it looks like it has been delisted. So let me know your thoughts in the comments and consider, you should really consider, people get so attached on, one stock. And right now in this market, this volatile market we're in, stocks aren't just, we're not in this raging bull market right now where, Tesla or Amazon or, Neo or whatever the case may be, where you just buy it and the thing just goes up for years and years. Right now, we're in this crazy volatility, and things are doing well, and all of a sudden, boom, markets get smacked and they get sold off, and blah blah blah. So depending, unless you're buying like an index fund, S&P 500 index fund, and you're just buying and holding it long term in a retirement account, these stocks right now are unless you're getting dividends, it's been a tough market to trade. Not all trades are, you're not getting as much out of the trades as you expect. So anyways, check out that market risk PDF, or it's not really a PDF. There's, I think, 2 sheets for free. It's a little write-up on market risk and trading. It's in the video description. And let me know your thoughts on the future here of Bed Bath and Beyond. All right, guys, take care.